Good afternoon. This is Valerie Leonard. I am the founder of Nonprofit Utopia. I want to say thank you so much for joining us. I want to remind you, for those of you who've been following us, we are focusing this month on nonprofit compliance. And just bear with me. I need to turn something off. All right, can you hear me now? I felt the little echo before. All right, so I just want to remind you that we're focusing this month on nonprofit compliance. We're going to take you through the entire compliance process. And when I talk about the compliance process, I am talking about looking at compliance from all levels, including the state and federal government. And today we're going to focus on the IRS. All right, so without further ado, I am going to share my screen and we will go into our presentation. So just bear with me. All right, so we're going to be talking about the roles of the IRS in nonprofit compliance. Before, we spoke about the roles of all the major players, and today we're going to drill down to the IRS. All right, so we're going to talk about the roles of the IRS in regulating nonprofit organizations and in helping them to succeed. All too often, we focus on the IRS and think about their punitive role when we don't file on time. But really, there's a whole section of the IRS that is focusing on strengthening the nonprofit sector, and we'll talk a little bit about that. We'll also talk about what to do if you lose tax exempt status, the consequences and penalties of late filings, as well as payroll taxes. All right, so just give you an overview of the situation. Back in 2014, we found that tax exempt organizations are twice as likely as individual taxpayers to be late with filing annual returns. There are approximately 1.4 million registered organizations in the United States as of 2014, and you'll see in a couple slides that that number has almost doubled. There, at the time, were 579,000 registered organizations that lost their tax exempt status. That was 40%. And that's just as a result of not filing Form 990 on time, right? And there are a whole slew of other reasons why they could lose their tax exempt status, but 40% of the organizations that are registered in the United States lost tax exempt status just because they didn't file Form 990 3 years in a row. And then a number of those organizations really didn't know, right? But you can't necessarily plead ignorance with the IRS, right? So compare that to about 85% of individuals and corporations filing their income taxes on time, and that's Form 1040. And that was back in 2014. That number is slightly different now, and I would imagine that COVID has a lot to do with it. So let's look at what's going on now, looking at 2014 versus 2022. So this first column, basically tells you the type of organization, whether or not it was revoked, whether it's tax exempt. The next set of columns in blue tells you the status in the United States, and then the columns in orange tell you what's going on in Illinois. So in 2014, there were 863,000 roughly organizations that were eligible for tax exempt status. So these are the 501c3s that were good, in good standing. Fast forward to 2022, that number grew by 43%. There are now over 1.2 million that are eligible for tax exempt donations. And that is a change of 367,000, right? So, of that number, or rather, in addition to that, we have about 64% at some point in their lifetime had their tax exempt status revoked automatically for not filing their Form 990 on time. And, in some cases, they were actually able to get their tax exempt status back, but, just over time, over 64% of nonprofits have lost their tax exempt status. And then we have now 2.1 million organizations total. So that's your organizations that are eligible for tax exempt status, and then those organizations that have gotten their tax exempt status revoked. So about 51% of the organizations are actually registered, right? I'm sorry, that's a 51% change over 2014. So we have about 40% in 2014 who had their tax exempt status automatically revoked for not filing, and 60% were eligible. Fast forward to 2022, about 44% have had have had their tax exempt status to be automatically revoked, and 56% are still eligible. So, compare that to what's going on in Illinois. In the state of Illinois, we have seen the number of organizations that are eligible for tax exempt status grow by 33% compared to 43% nationally. We have seen the number or the percentage of organizations lose their tax exempt status. It was 58% growth over time versus 64% growth over time for the nation. The number of total registered organizations in Illinois grew by 43% as compared to 51% for the United States. And this is between 2014 and 2022. And we see that in the state of Illinois in 2022, about 53% have seen their tax exempt status be automatically revoked for not filing tax returns or the Form 990 for 3 years in a row, and compare that to 2014, where there was only 40, well, not even only, it was 43%. So the number of organizations that are out of compliance has grown significantly since 2014. And then when we look at the estimated percentage that are still eligible for tax exempt donations, we see in 2014 for the state of Illinois, about 57% were eligible, and now we're down to 47%. So we lost 18% of our organizations in terms of eligibility for tax exempt status. And again, I would imagine that COVID had a lot to do with this. I would imagine too, in some cases, that a number of organizations closed their doors and they may not have even filed their last return as a result. All right, and then just backing up to my experience, I deal with a lot of nonprofit organizations on a day-to-day basis. I work with them on strategic planning, I do capacity assessments, I do proposal writing, and all of that good stuff. But it seems that no matter what I'm working on, all roads lead back to compliance, right? And then we noticed too that the IRS redesigned their Form 990 in 2011, and then they redesigned it again in 2020. And in both instances, they wanted to make sure that there was more disclosure, right? So that you could really get a feel for what's going on behind the numbers, right? So they wanted to understand a little bit more about board governance, who's on your board, what's been accomplished, and all of that good stuff. So what we're going to do today is make sure that you understand the basics of what the IRS is looking for. So we're going to be looking at things like Form 990, Form 1023, which is your application to actually get tax exempt status. And then we'll also be looking at payroll taxes. All right. So before we do that, we're going to review who the major players in nonprofit compliance are. And I think some of these names will surprise you, right? So, first and foremost, it is you, the nonprofit organization. Your board, as well as your staff, has responsibility for making sure that the organization is compliant with requests from the federal government, state government, any funders that they might have. And as a result, you're going to get enhanced reporting and internal systems because this compliance process can also be used to help, enhance your management. And you will also increase your efficiency and have greater accountability and greater capacity because, being in compliance actually increases your capacity to raise even more money. You also have the IRS. So the IRS is concerned with your Form 990, which you file instead of a tax return, and your Form 941, which is your payroll taxes. And then you have the Illinois Department of Revenue. Not only do you have to register with the Illinois Department of Revenue, that's the Form Reg 1, but you also have to do the Form 941 IL, which is, for your state taxes for payroll. And then you have the organization's funders. They're interested in getting their reports. You have the organization's auditor, and they are concerned with your annual audit and providing technical assistance and helping you with your Form 990. You have the Illinois Attorney General's office, and they are concerned with registration at the beginning, when you first create the organization, and they also want you to file Form AG90IL. You have the Illinois Secretary of State's office. You have to file with them when you start your organization. And from there on, you have to do yet another annual report. And that annual report is focused on, who's on your board versus the Illinois Attorney General's office. They're focused on financial reporting. And then you have the public, and the public is very concerned about who's coming into their community, right? So they might want to look at your Form 990s and other publicly available information to make sure that you are doing exactly what you said you would be doing for the community. All right, Form 1023, that is the form that you need to complete when you start the organization. So that's really where compliance starts. We think that compliance starts, after our first year of operation, but it actually starts before we even start our organizations, right? Or before we get tax exempt status. So when you file the application for tax exempt status, you have to do Form 1023. That's an online form, and you'll find that on the IRS website, right? And you'll be answering questions that help educate you as to what's going to be required, right? So you have to, on the outset, when you even create the organization, indicate that you're not going to have any of your funds um, enriching the board or high-ranking staff members. And there's a number of other things that you have to attest to. You need to provide your bylaws, and they're going to check those and make sure that they're in compliance with your state, et cetera, et cetera. I would strongly recommend that you do the Form 1023, which is the full application, so that they can look at all of your paperwork versus the 1023. The Form 1023, you're just giving an attestation saying that you are in compliance with certain practices, and you're not necessarily providing the documentation so that they can inspect it. And if you're not disciplined, chances are you're going to give those attestations, right, saying that you follow this practice, but you might forget or you might procrastinate and not necessarily go ahead and put those systems in place. So again, I strongly recommend, regardless of the size of your organization, that you go ahead and complete the full Form 1023. And there are instructions as to how you file, and this is not necessarily about Form 1023. I do have a course in how to start your organization, but this is not it. I just wanted to let you know that your very first deal with compliance starts when you start the organization. So now we're going to look at the IRS's roles in compliance. So uh, they fulfill a number of roles, right? The first thing that they want to do is make sure that there is integrity in the tax exempt sector, right? And they want to also make sure that you succeed. So they provide education and outreach. If you have a relationship, preferably a relationship with a local university, you can actually get them to come out and do a full day workshop to help you understand the rules and the regulations. And even if they don't come out, they have a number of resources on their website that you can download and read, at your leisure. They also give a determination as to whether or not you are tax exempt. So after you fill out your Form 1023, assuming that they have no questions, then they will let you know whether or not you have tax exempt status. They'll send you a letter of determination and all of that good stuff. They also examine you for ongoing compliance, and that's usually through your Form 990. They provide greater transparency. They're always updating the Form 990 to get even more information that is useful not only to them to understand what's going on with you, but also useful to potential funders. And really, quite frankly, going through that process filing Form 990 can be helpful to you because it causes you to reflect on what's been accomplished, who your board members are, and all of that, right? And it's really going to promote better governance, and better governance meaning your board is better educated, better equipped to make sound decisions as it relates to how your organization is being managed and complying with the law. All right, so the first thing is Form 990. As I indicated before, you file Form 990 in lieu or instead of file Form 1040, right? So every year you file it, it's due uh, 5.5 months at the end of your fiscal year end. So if your fiscal year ends in June, you have 5.5 months after that to file. All right. So all organizations have to file a Form 990, whether it's a postcard, whether it's a Form 990 EZ, the short form, or if it's a Form 990, the long form, or if it's the 990 PF, which is for private foundations. All right. So here is a list of the derivatives of Form 990. And when I say derivatives of Form 990, I'm just talking about, the different types of Forms 10990. So we have organizations that make under $50,000. They are required to file the postcard or the Form 990N, right? They might choose to do a full Form 990, but they're not required to. I would go and suggest that you do a full Form 990. One of the reasons being is because the IRS has a relationship with GuideStar, and GuideStar is an organization that uh, they collect data on different organizations throughout the United States. So every time you file a Form 990, they collect the data and there's a profile on you, right? But if you only do the postcard, that profile, they don't have a profile of you. And the profile is good because people who are interested in donating to your organization can go to GuideStar and do a search and find your Form 990, and they could start, the process of making a decision as to whether or not they want to give you funds. Organizations that have gross receipts of under $200,000 and total assets under $500,000, they can choose to do the Form 990 EZ or the Form 990, and there are instructions. And then organizations that have gross receipts greater than or equal to $200,000 and total assets greater than or equal to $500,000, they have to do the Form 990. And if you are a private foundation, then you do the 990 PF. All right, so when we look at the penalties for filing late, if you're an organization that's under $50,000 and you file the postcard, the e-postcard, there are no penalties, right? Organizations that have revenue under $1 million, they're subject to a penalty of $20 per day for each day the return is late, for every return that's filed late, up to a maximum of $10,000 or 5% of the organization's gross receipts, whichever is less. Organizations with over $1 million in revenue, they have a penalty of $100 a day up to $50,000. And again, that's for every return that's late. And then organizations that fail to file the required information return, so that could be your 990 EZ, or if your foundation, or the postcard for 3 years straight, right? So 3 years straight, you could lose your tax exempt status. So what do you do if you lose your tax exempt status? And remember, from those numbers I shared with you, you are definitely, definitely not alone. We're at a point now where the majority of organizations in the United States at some point or another have lost their tax exempt status involuntarily. So the first thing you do is don't panic, but you want to be able to communicate openly and honestly with the major stakeholders. So first and foremost, that's your board and staff and your funders. Let them know what the problem was, but don't come to them with just problems and being panicky. Come to them with solutions as to how you can handle this in the future to make sure that it doesn't happen again. You want to file all of your back returns. And if you have a good reason for not filing the returns, you want to work with an attorney and try to develop a letter of abatement. So this could be with your attorney or with your accountant. And the letter of abatement is written to the IRS, letting them know what your reason for not filing the returns are. And then you also want to have a plan in place, to let them know that it won't happen again. You want to develop board operating policies and procedures, again, to put systems in place that will, give you calendar dates as to when these are due, give instructions as to when these different reports are due, etc. And then explain the role of each party in preparation of these documents. And again, you want to share this plan with board, with staff, your funders, and with the IRS. You want to develop a compliance calendar, which has a list of every form that needs to be filed with, say, your funders, city government, the IRS, state government. If your county requires something, with whomever, you need to file these reports and, make sure that you keep up to date with that calendar. And then also, as you develop that calendar and as you're in contact with the IRS, you want to file for tax exempt status to have it reinstated. And the way you have it reinstated is you basically are going through the process of filing Form 1023 again. All right, if you've got a good reason for not filing for 3 years in a row, you need to share that with the IRS and they could renew your tax exempt status retroactively. And then if you're in a situation where this is going to take a long time and it's going to impact your cash flow, you should consider getting a fiscal agent to collect money and manage it for you until you get your tax exempt status and can receive the funds as an organization. All right, so here's an outline of the streamlined retroactive reinstatement process. So this is for organizations that are eligible to file the postcard, which is the 990N, or the Form 990EZ. So this is the short form. So you have to file within 15 months of losing tax exemption, and then you have to submit Form 1023 and the fee that goes with it. And this fee may have changed. I believe it's a flat fee of $600 now. And then, if approved, the IRS is going to consider the organization to have reasonable cause for its failure to file Form 990 for 3 years, and then it will reinstate you retroactively, right? So they're not going to impose a penalty for failure to file the annual returns, right? If the organization files Form 990EZ for each of the 3 years that they have failed to file. So this is for folks with the EZ. So for any year for which the organization was eligible to file a postcard, the organization is not required to file a prior year postcard or 990EZ. So you get off a little bit easier, right, if you file the short form or the postcard. So the folks who are filing Form 990, they have to file within 15 months of losing tax exempt status, right? And in addition to the process we just outlined for the folks doing the 990 EZ or the postcard, you have to have a statement confirming that you file the paper returns, and now you don't do the paper returns. Since COVID, everything is online. You have to also have filed a reasonable cause statement that gives an acceptable reason for not filing for 3 years in a row. And then if the application is approved, they're not going to impose the penalty, right? So that's a good thing. All right, so when we look at the retroactive reinstatement process, and this again is for organizations filing Form 990, you have to apply within more than 15 months, within 15 months of losing tax exempt status. And in addition to the requirements under the streamlined process, you have to file a statement confirm that you filed the paper returns. And as I said before, they're no longer accepting paper returns. Everything has to be online. And you have to have a reasonable cause statement that provides an acceptable reason for not filing for 3 years in a row for each of the 3 years, not for just one, but for each. And then if the application is approved, you won't have to pay any penalties. All right, so now we'll be talking about the payroll taxes. And if you have any questions or comments, please feel free to post and I will go to those after we're done. So when we're dealing with payroll taxes, we have to pay into a trust fund, and that's money that's being withheld from the employee's payroll. So that's things like income tax, Social Security, and Medicare taxes. And again, those are held in trust, and the IRS takes those very, very, very seriously. So even if you're a nonprofit that doesn't pay income taxes, you're still liable to pay payroll taxes. So you can do this on the annual federal Form 944, and I would not recommend doing this annually. This is such a complicated process. I wouldn't even recommend that you do it in-house unless you have, a pretty strong accountant, pretty strong accounting department that can keep up with this. So Form 944, you're filing on an annual basis, and that's due January 31st, of the following calendar year, right? So deposits for Form 944 are not required unless the tax liability for the year is $2,500 or more. So I recommend strongly that rather than doing this on an annual basis, that you do it on a quarterly basis. And actually, you should really work with, an organization that actually will file your payroll taxes for you. And they actually pull the money out, every 2 weeks. And, that money is kept in trust. But the Form 941 is filed on a quarterly basis, right? So the folks who make the Form 941 deposits are required for organizations that have $2,500 or more in taxes a quarter. And starting in 2010, deposits are not required if the tax for the current quarter is 2,500 or more. All right, so file Form 941. The taxes that have to be deposited are income tax, FICA, which is your Social Security tax. You have to file that for the employee as well as your employer's share, right? And then you also have to be cognizant of the fact that not only are you required to file, but you're required to pay. So there's a penalty for not filing on time, and then there's a penalty for not paying on time. All right, and this is what a Form 941 looks like, right? So it's going to include the wages that you've paid, the tips that your employees have received, and that really is not applicable for nonprofits unless your nonprofit is operating a restaurant of some type. Any federal income tax you have withheld, and then both the employer's and employees share of Social Security. All right, so we're not going to focus on the second part here because that is for farm workers and seasonal workers. So the penalties for filing 941 late are pretty steep. That's 5% of any unpaid tax due in whole or a part, right? For the whole or part of the month. So they're not even rounding, like saying every 15 days you're rounding up. So you could be a couple days late, and if you're not up to par, you're going to have to pay for that, the penalty for the whole month. So it's going to be up to a maximum of 25%, regardless of whether or not you have an extension granted. You're also going to be liable for 0.5% of any unpaid tax due for each whole or part month the tax is paid late, up to a maximum of 25%. So this is on top of the unpaid tax due, right? So for every return that's not filed, 5% of the unpaid tax. If it's paid late, is 1/2 of the unpaid tax due. All right. So the maximum for this penalty is also 25%. The penalties will not be charged if you have a reasonable cause for failing to file late or pay. Right? So use of a reporting agent or other third-party payroll service, as I indicated before, is preferable because they're experts at filing this for you. All right, so I'm going to make this larger so you can see it, just so you can get a real good sense for the impact of failure to file, right? So the failure to deposit penalty, right? So if you're 1 to 5 days late, it's 2%, right? If it's 6 to 15 days late, then the penalty is 5%. If you're 16 days or more late, then the penalty is 10%. And then if you're more than 10 days late after the first IRS bill, is 15% late, right? So the penalty on $3,000 after 5 days, or within 1 to 5 days, is $60. And within 6 to 15 days, it's $150. And then it goes up to $300 for 16 days. And then anything more than 10 days after the first bill is $450. So you can see that the IRS takes their failure to deposit really, really seriously. They want to make sure that we're not skimping on our employees' pay. All right, so in addition to the failure to file, you got the failure to file penalty, that's 5% per month, up to a maximum of 25%. And then you got the failure to pay is 0.5% per month month of unpaid tax, then 1% of month after the intent to levy. And what the intent to levy is saying they have an intent to take you to court and get these taxes, and they'll pay you'll pay an additional penalty. They'll start to seize the money directly from your bank account. All right. So on top of those penalties, you got interest. So the rate is set quarterly and historically has been anywhere from 2% to 6%. And it's also a 10% avoidance penalty assessed when the deposits are not paid on a timely basis. So there are literally organizations and businesses that they've gone bankrupt. They've had to close just because of payroll taxes. All right. And this chart here is basically the same information. It's just presented differently. This is a bar chart that shows the penalty, an example on $3,000. All right, so the IRS, again, they're not just people that have penalties for us. They actually do want to strengthen the nonprofit sector, and they do this through education. They have a whole page with nothing but education resources, publications, and guidance that you can download. They have a link to stayexempt.irs.gov, and you have a number of videos and other resources and classes that you can take. And then you've got the tax exempt and government entities issue snapshots. And then again, these are other resources that you can use to learn more about taxes and where you stand as a nonprofit organization and what you can do when you have questions or you feel like you might get in trouble. All right, so if you have any questions, feel free to post. I will answer to the best of my ability. And when I say the best of my ability, please be aware that I have run a nonprofit organization, but I also rely on the professionals meaning attorneys and accountants. All right, so I will answer to the best of my knowledge as a nonprofit manager. Okay, so do you have any questions or comments? If so, I will check them. There doesn't seem to be any questions or comments, so no questions, no comments. I want to say thank you so much for taking time out of your busy schedule to join me today. And I will be back tomorrow, and we will talk about the role of the Attorney General in terms of compliance for nonprofits. All right, and take care. Bye-bye.